I think the most immediate impact so far has been on liquids demand when we're looking at petrochemical feedstocks, and so far we're seeing some of that impact in terms of the US trade flows, particularly of LPG into China, and that's being leading to some revisions. And already in China, we're starting to see run rates for some of the petrochemical plants beginning to become lower because already margins were under pressure before the trade war. So we're starting to see what was meant to be one of the biggest sources of demand, which was basically LPG and ethane, leading the Chinese move to more towards naphtha. So actually, before the trade war, the only really big demand driver in China was going to be the petrochemical feedstocks. Now, it's not going to be LPG, it's not going to be ethane, so it's naphtha. Gasoline has basically flatlined. Diesel is more of a cyclical issue rather than a structural thing in China. So actually, probably looking at relatively flat demand growth in China. And that's even before we start to see the indirect effects of tariffs. It's too early to say what that's going to look like,